everyone, welcome back to the Capital Mindset Show. Today we're going to be doing an update video on Facebook or Meta. I always call it Facebook, so I'm sorry. I apologize for that if that triggers you. Trigger warning. So we're going to talk about Meta systems here today, and we're always going to be looking at past videos to see what I was saying back then. You know, to keep myself accountable, I'll do kind of like the work for you in that sense. I try to have claim that I have a decent memory, so I kind of remember what it is that I said. And we'll look at the original video when I first started talking about Facebook this year. I think I might have talked about Facebook last year, but not in a favorable light, even though it's been a position in the portfolio for quite some time. So I like to try to remain objective and try to see, what is the price today? What does it mean? So we're going to talk about what kind of happened today. So taking a look at today, we see that it was down 3.32% and it actually spiked up. Oh gosh, you see, this is upsetting to me because I wanted it to finally get to that dream price and I could add in closer to my cost basis. Now, if you take a look at the public portfolio, you can see my cost basis now, and I actually worsened my cost basis because I was adding to Facebook at higher prices than my original cost basis. And I kind of creeped up the cost basis because I only made the portfolio public at a little after 1,000 subscribers. And so you guys actually started to witness when I, already kind of hurt my cost basis a little bit because we'll talk about the video when I started to nibble. So I actually nibbled my nibbling range. I added some shares and we'll get to that. But let's talk about the earnings real quick and kind of cover some of the things. They actually surprised the numbers for daily active users. Daily active users actually came out better than expected. And, they did actually report a little bit of a decline in profits. So keep that in mind. But again, we know where those profits are going. Those profits are going to a lot of investment that the business is doing. They actually grew revenue by about 6.6%. So that was interesting. Again, this is a company that I think people are a little bit pessimistic at the present moment in time. Very interestingly so. Because if you take the clock back about 6 months, people are very optimistic about this. Other positions within my portfolio, I love it when people kind of react that way, and I like to accumulate in those periods of times. I actually like walk the walk in terms of buying when others are fearful and then selling when others are greedy. For example, I took profits on ConocoPhillips. I think that when I was taking profits, when I made that video, there were a lot of people coming out with videos saying, you should buy oil stocks. I was selling when others were greedy. I also took profits. For now, it looks like it was a good move for BHP and Conoco. So I'm very happy with that thus far. And I've been kind of looking for places to redeploy that capital. So I am a little bit saddened to hear today to see that, we see aftermarket move is 17.95%. I hope that it kind of reverses in the market open tomorrow or in the subsequent months. So because I would still like to add to my Facebook position or Meta. There you go. I did it again. I'm going to be doing that throughout the entire video, and I apologize in advance for that. I know it's called Meta, but regardless, I do like the business. I like the possibilities entrenched in this company, and that their Facebook platform, that was on purpose, and that was a good saying. Facebook platform, Instagram platform, these are cash cows that help fund these other aspects of their business, similar to my Google position. But taking a look at the overall thing, we'll actually take a look at something I said back in the day here in January 28, 2022. I'll actually play a little bit of a clip here. We won't watch again the whole video, but we're on the 17-minute marker, 17-minute, 30-second marker to be exact, and we'll just hear what I said. Valuation here is quite compelling. It's not like dumping all my money and buying valuations. It's not there yet, but it could get there, and I'm just going to start to nibble. I'm going to begin the nibbling process. I'm going to start buying as of tomorrow, right? And then that's basically my opinion. All right, so basically, you can watch the full video for further context, but on January 28, 2022, I stated that I will begin the nibbling process. And so I was already buying shares at a much higher cost basis. The price at the time was $294. And so I actually hurt my cost basis a little bit because my cost basis was actually below 150. And then as I began to add in more and more, it kind of worsened the actual price targets there. Or not price targets, buy prices there. So taking a look more recently at this video. So in this video, my wonderful face. Actually, I'll scroll up just for the lull so you can see my face. But this video was posted on February 17, 2022. So about a month later, well, less than a month later, about half a month later. Taking a look at the kind of strategy I kind of shimmered out, you can see that I had a nibble strategy at sub 300. So under 300, which was in the previous video, was my nibbling strategy. And then I stated here that my bite strategy, so some people find it funny, but I have a nibble, bite, and gulp categorization for stocks. And nibble is literally what it means. You know, it means like buying a couple shares here and there. Nothing too big, nothing like crazy in terms of additions, but just kind of beginning the process. And I'll explain a little bit in greater detail why I do that instead of just buying outright when I think something is good. I like to ease in and I like to ease out, typically on stocks. Very few instances, I'll just get out or I'll just buy a ton. Very few instances. So taking a look at the bite strategy, you can see there in this video, I made a statement basically by saying that I would bite the stock between 227 and 167.83. Okay, that actually has been recently, the gulp has actually been recently adjusted to slightly under that, to about 165. I have to actually update that, but 165, and it's barely any difference. Consider it the same thing if we're being honest. And so the bite strategy, I've been biting for quite some time. And you've actually been, if you guys have been watching the portfolio for quite some time now, you've seen the size of the position grow and grow and grow. And I've been biting strategically as it was most of the time when it was below the $200 mark. So, and then as we were getting closer and closer and closer to that 167, it started to creep up and creep up and creep up. We never got below that, unfortunately. I think if we did, we got there for moments. But I was very, very excited because I thought that we would get there. And it's because I stated that, that it seems like I jinxed it. But now that I'm saying this, I'm in hopes that I'm jinxing it. I'm reverse jinxing it. And now because I'm stating this and making this video, it is going to fall below that price point. And then I will be happy and I'll get it. But I have to pretend like I'm happy if it goes up. So if I'm happy if it goes up, then the universe is going to, make it go down. No, I'm just kidding. But in all regards, that's kind of like the past statements by me. And then, so this is an updated statement. So I'm hoping that we actually, in all realness, I hope that Facebook gets that retracement. I hope this rally does not continue. I want people to be very pessimistic on this company. All right, we're going to head over to the model to see what the heck's going on. So let's start with here. So this is from the old video. So go check out the Affirm video if you want an update on that. So we're going to do Facebook. And then we're not going to do an unprofitable analysis. We're going to do a profitable analysis because Facebook is obviously profitable. Hope everyone knows that, by the way. And let it load in. So Facebook, okay, I'm actually going to keep these growth rates because I think this is on a more conservative basis. Let's actually, by the way, everyone, this price right here is no longer accurate. It's actually in the 200 range. So keep that in mind. So with your brain, you have to actually say these are not buys now because unfortunately the price is not, it's up. And I don't like that. So taking a look at the, I do think they're going to perform some level of buybacks, but let's actually remove that. Let's say nah. And so it starts to be clear why I chose the 160-ish price target, because take a look at those growth rates I can imply and still get a very good return over time. So I like it at that price point. I need it to get there. And even today, if you were buying today, congratulations. I will admit today I actually did buy some. When the portfolio updates, that will be reflected. But I was buying today. I should have bought more. Well, we'll see. We'll see. We will wait and see to see if it was a bad decision not to buy. But I'll kind of explain myself a little bit why it is that I buy in tranches, because you don't know exactly when a position is going to, realize its full potential. So I set up a strategy so that I continually add to these positions because I identify good companies that I want in my portfolio and I just buy them. That's it. That's all it is to it. And so I'm making it sound easier than it is. But basically, that's what I do. So taking a look at some of these metrics, the model doesn't believe that, we're at risk of any form of bankruptcy. 9.96 score on the Altman Z score, and the model's own metric is saying no, it's not at risk of bankruptcy. I don't think that's a surprise to anyone. Now, the enterprise value is showing us that, they have more cash than debt. And, that makes sense. Last time we checked on Facebook, that was the case. So I know that it's that case now. Taking a look, it's actually very interesting because take a look at that recommended portfolio weighting. It is actually there right now in my portfolio. So I don't follow it, like it's the law, the letter of the law, but I do actually use my evaluation process, my model, to actually help me actually position or change the position sizings within my portfolio. I use it as a barometer of sorts. And like I said, for those of you who always ask, the model will be available around June 2022 if you guys are interested in using this tool for your investment approaches. Okay, so that being said, taking a look at the sentiment score is actually less than 1, so I like that, a little bit more negative. And we have, again, the buy rating by the infallible analyst, implying a 75.83% upside. So taking a look at the growth in cash flows, it was pretty strong. Revenue, up and to the right, cash flows up and to the right, shares outstanding up and to the right. Not liking that, but towards now, it's actually, you see that slight decline going on because they are actually starting a buyback program. They're trying to bring back some shares at these prices. I agree with them in this instance. See, this is an instance when I say management should be buying back shares. They bought back shares at higher prices. I've actually interacted with some of you in the comment section and even in the Discord saying, well, they bought back shares at these prices. Do you agree with that? No, I don't. And that's a clear-cut example of when the company actually grabbed money, went to the furnace and just threw it into the furnace and just burned it. So that's equivalent to what they basically did. And so I am a fan of buybacks when executed properly. When executed poorly, I think they're very detrimental to the long-term value of a business, right? You don't want them to do buybacks poorly, right? Easier said than done. That's a very broad statement without any definitive detail, but it is true on its own standing in that sense. So my thoughts on Facebook really haven't changed. I'm kind of upset here that the stock price has actually recovered. I would love for it to actually retrace itself and come back down so that I could then build the position even more because I'm actually really excited about it. All right, so I'm going to be covering one more stock today, so keep an eye out for that video as well.